Hi everybody, this is AJ speaking. This is a quick review of Tesla's China sales. We got numbers this morning. Tesla sold in the week ending July 27, 10,600 vehicles. This is the number that you can see over here. The slide you're looking at compares the last 6 quarters on a week-by-week basis. The chart down here compares the current quarter to date total with the last 5 prior quarters at that same point in time in the quarter. You can see that the current quarter Q3 2025 performs quite well. We're currently just under 38,000 sales. That outperformed all of the 5 prior quarters with the exception of the third quarter of 2024. And that was a quarter that came in quite strong at 182,000 vehicle sales. The key reference point here is the second quarter this year that came in at 130,000 sales. I don't expect the third quarter of 2025 to come in at the level of the third quarter of last year. But if we did come in somewhere close to that number, that would be very, very positive. And why it would be very, very positive is you see here. My current forecasting only expects a sequential increase of 9,200 units. But please keep in mind this forecast was made before we got the strong recent performance. So in other words, my current forecasting only reflects just under 140,000 vehicles for the third quarter. And when we go back to this chart and the current quarter-to-date trend, it appears likely Tesla can meaningfully beat that estimate. Since when you look down here, quarter to date, the third quarter is ahead by about 12,000 units already. Additionally, there are a couple of weak quarters ahead relative to the second quarter. For example, this was week 5 in the last quarter was only at 7.3K and week 6 was only at 3.1K. This was holidays related. We don't have that in the third quarter. And therefore, if the trend continues for 1 or 2 more weeks ahead of last quarter, I will definitely upgrade my deliveries estimate. Please note the just announced Model Y L, so the larger Model Y, launches in the fourth quarter. So there is some risk that there might be some demand delay because there might be some Chinese customers that want the larger Model Y. But at present, it appears this has no impact. So the big picture takeaway of this analysis is that Q3 performance is doing quite well. But now let's look how this positions Tesla versus the competition. So these companies from top to bottom are ordered by last 4-week total sales. And please note the scale for BYD is broken because BYD outsells everyone by a significant amount, and that's why it's only shown in the 33% scale as noted. So over the last 4 weeks, BYD sold the most new energy vehicles. So this chart not only includes battery electric vehicles, but also all kinds of hybrid vehicles. Aito pushed for the first time to become number 2, and Tesla is just slightly behind Aito at number 3. But of course, Tesla's early quarter sales are always low relative to the second half of the quarter. That's why I expect Tesla to regain a second place as we move further into the quarter. The other key takeaway is that all brands except NIO saw a positive weekly performance trend. So these green arrows they always indicate the most recent week-on-week change. So all companies were up except NIO was also up, but just slightly from 4.9K units to 5,000 units. So 4,900 to 5,000 units is what you see here. This chart also shows you the NIO's sub-brands. So there's the NIO brand, the Onvo brand, and Firefly brand that sits in NIO. And you can see that the highest margin brand, so the NIO brand, did quite well, while the Onvo brand saw a significant sales contraction. And the Firefly brand was trading sideways, which resulted in an overall volume trend that was rather muted. Overall, the combined total sales of the brands that you're looking at increased week on week by a very strong 19.6%. However, that's kind of normal in China at the end of the month. So next we have to zoom out a bit. And this is what this chart does. This includes all the main brands and shows you a trailing 12-week metric. You can see that BYD is completely in its own league in China, selling almost 340,000 vehicles over a 12-week period. Tesla is a strong, there's a huge gap, but compared to all other companies except BYD, Tesla is at a strong just under 135,000 vehicles. The brand that crushed it in terms of volume is Aito. Aito is controlled by Ceres Group and Huawei, and their hybrid vehicle strategy found a lot of demand, and they have now become quickly the number 3 largest NEV seller. So NEV is new energy vehicles, so that includes electric vehicles and hybrid vehicles, but no pure ICE or internal combustion engine cars. Leapmotor here in gray also crushed it. Trailing 12-month sales see a very strong upward trend, and now even moved slightly ahead of Li Auto. What these 3 companies have in common: they all sell a lot of hybrid electric vehicles, and they are quite popular with a lot of Chinese consumers. XPeng here in yellow has been flatlining after it had quite explosive growth, which was driven by offering a lower cost vehicle, lower cost by XPeng standards. XPeng used to be a more premium offering in China, and then they launched the M03, which turned out to be quite successful because it was a low entry point to this premium brand. And this is something that is often observable in the auto industry. For example, when Porsche long times ago started selling lower entry points to the very high premium Porsche brand, that strategy also proved successful. So that's why I think if Tesla was to offer a product that offers a meaningfully low entry price, that would most likely be a highly attractive product. Whether it's financially attractive, that's a different story, but I think they could sell a quite significant volume. Then when we look at Xiaomi, they kind of flatlined around the, let's call it 77,000 vehicle sales mark on a 12-week basis. But please keep in mind, this is just as the first ever SUV starts to sell. So I expect that this trend will see kind of a takeoff in the next couple of weeks. Xiaomi is currently in the ramp-up phase of the U7, the new SUV. And even Chinese companies can't immediately get to volume with a brand new product that is manufactured in a brand new factory. Then there's quite a gap, and then we get to Zeekr. Zeekr is owned by Geely. Geely Group as a whole is the 3rd largest pure electric vehicle seller globally, and just recently pushed VW Group to pushed VW Group from previously 3rd place to now 4th place, and took over VW Group 3rd place. Zeekr is a premium brand, but as you can see, at least for several weeks, has now flatlined at the 41,000 12-week sales rate. Then we get to NIO sells through 3 brands: the NIO brand, the ONVO brand, and the Firefly brand. So you can see that Firefly is still quite marginal at below 10,000 units, but keep in mind we don't have full 12 weeks yet, so this number will slightly increase. I expect Firefly to come in just around the 10,000 units mark for 12 weeks. The new ONVO brand already kind of flatlined at 17,000 units, also not very exciting. But of course, keep in mind this 12-week trend still has some weaker seasonal months in the mix. So seasonally, I expect some upward trend across the market. And then when we look at the important NIO brand, the NIO brand is the most important brand because it has the highest margin. We can see how the sales rate came down from just over 40,000 vehicles to just over 38,000 vehicles now. So when you add all NIO sales together, you get to a 64,000 unit sales rate for 12 weeks. Let's call this roughly a quarter. Let's round this up to 70,000 units. This gets NIO still nowhere near the over 400,000 units they guided for. I think week by week, we don't see explosive acceleration in volume growth. It becomes increasingly unlikely that NIO can get anywhere near its guidance. And as the market wakes up to that realization, the stock will obviously sell down on that. I expect the stock to sell off hard early September when NIO reports second quarter results. But I will discuss the NIO case in a separate video. So that's the end of this quick Tesla China sales performance and market update. So just to wrap up, the key takeaways are Tesla sales are doing quite well this quarter. So right now there are no red flags. The market overall is performing well. Volume in this market segment keeps growing quite nicely. Big driver is that the overall Chinese market does quite well, auto market, and there's a substantial increase in adoption of new energy vehicles. And that obviously favors battery electric vehicle sales and hybrid electric vehicle sales, which already account for over 50% of the total market. Thanks to continuing strong government support, it's highly unlikely this is going to change. And therefore, at present, the rest of the year outlook for Tesla looks quite good. And as I mentioned earlier, I probably have to upgrade my Q3 China sales estimate. Thanks for listening. Bye.